Welcome back to the weekly stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of over $136,000. That's made up of the over $72,622 in my stake portfolio and the $63,680 in my Vanguard portfolio. Today I'm going to be giving a bit of an update on where I've been investing, as I have been heavily pouring money into my accounts, and I do have a new position in my Vanguard portfolio, which I'll speak on today, as it's been a while since I added a new holding to my portfolio. Starting off quickly, I'll give an update on how my stake portfolio is looking. So as you can see, currently it's sitting at over $72,000, which is around 32% in the green, or around 17,800. Overall, it's been a bit of an up and down story, as for many investors. If we have a look at the last day, I'm obviously down. The last month has also been down around $2,300. Even in the last 3 months, I'm down $2,600. So it's been a rough last quarter. But overall, if we look at the last year, I'm still well into the green, around 17.7%. So it's still been a good year, just a bit of a rough quarter recently. Looking at my holdings again, nothing's changed since the last video. I still have my key 4 holdings of Amazon, Google, Microsoft, and VOO. VOO is just an S&P tracking ETF. I have been obviously buying more of Amazon and more of Microsoft as I've been building those positions. My Amazon position is now over $12,000 USD, and my Microsoft is around $9,170. So those positions continue to get bigger, and I really think I will be able to see some good gains in this. One of the key things I wanted to highlight in this video today was my new individual holding that I bought. So I've built up this VGS position recently. So what this does is it's a broad market tracking ETF. It tracks everywhere globally except Australia. It's 1,300 companies. It's mainly heavily weighted towards the US, but also has exposure to Europe and other jurisdictions. And you can see it's sitting at around $146 per share. This had been as high as 156, I believe, at times, but I've really built this position up. It's now sitting at $62,000, and it's by far my biggest across both portfolios. Vanguard just announced their new Vanguard S&P 500 US ETF, so very similar to VOO. This product was never offered on Vanguard for Australia, so I've been waiting for them to drop something like this, and they finally have. So I invested around $1,500 into it straight away. So this is also the hedged version. So we'll take a look at this. So as you can see, the S&P 500 US Index hedged ETF. The reason why that's important is because I obviously I am based in Australia, so I'm using the Australian dollar. And one of the recent things is the Australian dollar has actually done quite well against the USD. So you can see in the last kind of year or so, there was a point where it did really bad at the start, where it was around 63 cents. It's now all the way up to around 71 cents for the dollar. So what that means is I've obviously got a bit more buying power now when I'm buying US investments, but it also means all my US investments are now worth less Australian dollars than they were previously. So my other position isn't hedged because you have to pay a little bit more of an admin management fee. But I think for this position, I do want it to be hedged, as it looks like potentially Australia's interest rates will stay higher for longer, meaning we'll get more investment into the people buying our bonds, and might drive up the value of the Australian dollar even further. So I just want to be hedged against that. And again, it's a tiny management fee, and it won't have the biggest effect on the overall performance. But as you can see, this tracks the S&P 500. It's Australian dollar hedged, as I said, and this will just give me good exposure the same way VOO does here. But the great thing about Vanguard is I don't have as many fees that I have to pay whenever I transfer money in and out. There's no FX fees, so it's a bit of a cheaper version than when I'm investing on stake. I do still like stake, but if I can use Vanguard, then I will. So it's brand new, so again, there's been a lot of new market transactions on it. There's not much history, as you can see here. It only just got released, but I think this will give me, it's something that I've been looking for, so I'm happy to finally have this. And my goal is to build out a position of this over time. I think I'll allocate more and more money to this, and now that I have the 2 positions here in my Vanguard account, I can hopefully grow this to 100,000 now that I know that I have 2 key holdings that I'm really focused on. So again, my stake portfolio, it'd be nice for this to hit 75,000. Then I'm at 3/4 of 100 grand just in this one portfolio. I think I can definitely do that. Hopefully within the next month or two. But yeah, with my Vanguard portfolio, the goal is still to hit $100,000 worth in both. So a bit of work to do, but I'm happy to do that. If we have a look at my Excel spreadsheet, this kind of just shows it a little bit better. Because the ETF is so new, I can't actually link it on Excel yet. It's not showing up. So I've just kind of manually inputted some of the figures, and you can see it's sitting around 2% of my Australian portfolio, so it's still very small. And then my American portfolio is broken up into those 4 key players. And you can see VOO is the biggest at around 40%. And then the others are everywhere from 18 to 22% respectively, or 23%. Over time, you can see this is just the power of compounding and dollar cost averaging over time. Most of this is through me just dollar cost averaging. Bit of rockiness recently, as I did sell out of some of my Vanguard, but I'm growing it again. But you can see over time, the goal is just to continue this trend and keep growing and going up as I dollar cost average and put more money in, so I can hopefully hit the next mark. The next mark for me would be 150,000, as I am at 136,000. So it's around $13,000 to $14,000 left to go before I can hit that mark. Obviously, if markets rebound and some of my tech companies do a bit better, then that will obviously help a lot. That'll be a bit easier. But overall, I think long term, I should do it right. Regarding with dividends, last month I got no dividends. I'm not worried. All my dividends are reinvested back into the portfolio. It's all just seen as a little bit of extra cash on hand. But this is kind of how the two portfolios are looking. And like I said, I'm going to try to actively push to get my Australian portfolio to around that $75,000 mark. Same with my US one. I think I've put a decent amount of money in there now, so I might leave it as it is after I hit 75, just for a period, just so I can get my Australian portfolio a bit closer and closer to it. That means around $14,000, $13,000 I need to invest in it. But I'm pretty confident I should be able to do that before end of July, just on the trajectory that I'm currently tracking on. I've been pretty good on my spending so far this year. I've had a few car expenses that I've had to pay, but I haven't paid for any holidays or anything like that. So I have been aggressively investing. I think I've invested around $13,000, $14,000 so far this year. And we're now sitting in March, so start of March. If I can continue on that momentum and hopefully markets help me and there's a bit of a rebound, a bit of stability. Obviously, there's a lot of geopolitical risks at the moment, which isn't helping. But again, that's broader than just my portfolio. I understand that. So I'm just trying to control what I can control and just keep investing and for the long run. I'm already seeing the benefits of this as it grows. But let's just keep going on this journey, and I'm happy to share it with others. But yeah, overall, this is a bit of a quicker video. Not much has really changed, but this is kind of how the portfolios are looking. Feel free to share how your portfolios are looking and what your thoughts are on my new investment into the S&P 500. Am I too heavily weighted to the US? Or what are your thoughts on what I could be doing better? Cheers.